For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir has established itself as one of the most prominent technology companies on the global stage, with its market valuation climbing to an estimated $250 billion. This substantial market capitalization places it among the top 50 most valuable publicly traded companies worldwide. While many investors are captivated by Palantir's success and potential, there is a growing group of skeptics who question whether this extraordinary valuation truly reflects the company's actual performance and future prospects. Palantir has undeniably built a strong foundation, particularly through its unique position in artificial intelligence-powered data analytics. The company provides advanced software solutions that are leveraged by both government agencies and private enterprises for data integration, operational insight, and decision-making capabilities. Its clientele includes significant public sector organizations and commercial giants, a factor that bolsters confidence in the company's technology and future viability. However, despite these positive aspects, the valuation attached to Palantir's stock has reached levels that many would consider unsustainable when compared to its actual financial performance. To put this into context, Palantir's valuation has soared to over 200 times expected earnings and nearly 100 times its current revenue. These valuation multiples far exceed what most analysts and investors would consider justifiable. High-growth technology companies typically trade at elevated multiples, but Palantir's numbers are extreme even within that framework. When evaluating valuation in relation to actual growth, the mismatch becomes even more apparent. Since the beginning of 2023, the fastest annual growth Palantir has achieved was 36%. While impressive in isolation, it falls significantly short of the kind of hypergrowth that would justify a triple-digit price-to-sales ratio. For comparison, we can look at Nvidia, which is widely regarded as the dominant player in the artificial intelligence hardware and software space. Since its meteoric rise began in 2023, Nvidia has never traded above 45 times its revenue or 50 times its expected earnings. And yet, Nvidia managed to deliver explosive revenue expansion during that period, with year-over-year growth peaking at 265%. This comparison highlights just how far removed what Palantir's valuation is from its actual growth profile. Unlike Nvidia, Palantir has not demonstrated the kind of scale, acceleration, or earnings power that would typically justify such a rich premium in the market. Given these discrepancies, it becomes clear that Palantir's current valuation may not be sustainable over the long term. If the company fails to accelerate its revenue growth or improve its profitability dramatically, the market could eventually respond by correcting the stock price. In that scenario, other companies with more favorable valuation metrics and better established revenue streams could surpass Palantir in total market value within just a few short years. Two companies that stand out as strong contenders to overtake Palantir are Adobe and CrowdStrike. Adobe is an established leader in the digital media software space, widely known for its suite of products that cater to creative professionals across industries. Applications like Photoshop, Illustrator, and Premiere Pro have become staples for content creators, marketers, and designers. Adobe has also ventured into artificial intelligence through the integration of AI tools in its products, helping users generate content, automate tasks, and refine creative processes. This strategic move has enabled Adobe to remain competitive in an environment increasingly shaped by generative artificial intelligence technologies. Despite Adobe's innovation and long-standing market dominance, its stock has recently come under pressure. Concerns have emerged that emerging AI-driven platforms could diminish Adobe's market share. However, Adobe has responded by embedding artificial intelligence deeply into its offerings, allowing creators to maintain full control over their work while benefiting from productivity enhancements. The tools Adobe provides continue to deliver superior outcomes compared to many newer alternatives, reaffirming the company's leading role in the industry. Surprisingly, Adobe's stock now trades at a valuation that many investors would consider quite conservative. The company is currently priced at only 18 times anticipated earnings and 7.4 times its revenue, a stark contrast to Palantir's lofty multiples. Given Adobe's stable business model, consistent profitability, and track record of innovation, this valuation presents an appealing opportunity for long-term investors. When comparing the financials of Palantir and Adobe, the disparity becomes even clearer. Over the past 12 months, Palantir generated approximately $2.86 billion in total revenue. In contrast, Adobe Adobe brought in an estimated $22 billion during the same period. To put this into perspective, Adobe's revenue base is nearly 8 times larger than Palantir's. Now, if we assume that Palantir could maintain an annual growth rate of 35% over the next 10 years, and Adobe expands at a more modest 10% annually, both companies would be expected to reach around $57 billion in annual revenue by the end of that period. While this hypothetical scenario appears optimistic for Palantir, real-world forecasts paint a different picture. Analysts currently expect Palantir to grow by approximately 31% in the year 2025 and 28% in 2026. These figures are significantly lower than the 35% annual growth rate required for Palantir to catch up to Adobe within a decade. Therefore, assuming such high growth rates over an extended period appears overly bullish. If Palantir falls short of those targets, as current projections suggest it will, its valuation could face downward pressure. Meanwhile, Adobe's stock, which currently trades at a discount, could experience a re-rating as investors shift their focus toward companies with more reasonable valuations and stronger financial fundamentals. This dynamic could lead Adobe to surpass Palantir in market capitalization within the next 3 years. Shifting the focus to CrowdStrike, we find another company that could potentially overtake Palantir. Operating in the cybersecurity domain, CrowdStrike provides advanced endpoint protection and threat intelligence services. It is recognized as a top-tier supplier in the cybersecurity industry and has shown a strong growth trajectory over the years. CrowdStrike and Palantir have demonstrated similar growth rates in the past, but while Palantir's growth is currently accelerating, CrowdStrike's expansion has moderated somewhat in recent quarters. Despite this slowdown, CrowdStrike still maintains a notable edge over Palantir when it comes to revenue scale. Although Palantir might outpace CrowdStrike in growth for the next couple of years, its current valuation at 27 times revenue still appears quite high. CrowdStrike's valuation, while not exactly cheap, seems slightly more grounded in comparison. Looking ahead, analysts forecast that CrowdStrike will grow by roughly 20% annually for the next 2 years. However, as previously mentioned, maintaining 35% annual growth would be a tall order for Palantir, especially as its revenue base grows larger. On the other hand, CrowdStrike's 20% growth estimate might be slightly conservative, considering its strong brand and essential role in digital security. Should Palantir's actual growth fall short of expectations, and CrowdStrike's performance exceed conservative forecasts, the two companies might reach parity in market valuation. In fact, it's not out of the question that CrowdStrike could eventually overtake Palantir in value, particularly if investors reassess their growth assumptions and favor the more balanced risk-reward profile that CrowdStrike offers. In summary, while Palantir remains an influential force in artificial intelligence and data analytics, its current valuation appears detached from its actual performance and realistic growth prospects. Investors should be cautious about assuming uninterrupted high growth over long periods, especially given recent forecasts. In contrast, companies like Adobe and CrowdStrike offer more reasonable valuations, established revenue streams, and proven business models, positioning them well to potentially surpass Palantir in value in the near future. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.